But then on the other side, we have this big cycle of crypto starting to get embedded in the very rails of our financial lives.
Rolling over here to this recent announcement from Ripple, there's two that just came out, and I want to really take your attention to digesting this infograph in this video that this company i-payout put out. Now, I don't know if any other enthusiasts have put this out, but what I pretty much did is I screenshotted the pictures that you're going to see here in a second from this whiteboard drawing that they have in the background of this commercial. And you can see in this commercial that XRP sits in the middle of this whiteboard drawing, and it has this plan, for 2026. It talks about marketplace, mid-small banks, AI, enterprises, regulatory licenses, products, esports and entertainment. Senders Bank, it has JPM. I don't know if that stands for JP Morgan. It has the WF there, like for Wells Fargo, maybe. I don't know. But nonetheless, it's got XRP in the center as the bridge currency for all of this. And so, pretty much what I did is I copied this announcement. I'll play it here for a second so you guys can listen to it. But I screenshotted the whiteboard from different angles and then copied the announcement from Ripple and highlighted some of the things that ChatGPT told me to highlight. And I just want to read my conversation with ChatGPT on it. So first, this is the announcement, real-time cross-border payouts into the US and Canada. The goal here, it says, is to enable fast, transparent cross-border payouts into the US and Canada while reducing settlement delays and minimizing working capital requirements for global platforms. i-payouts is a global payments platform that enables businesses to deliver fast, compliant payouts to workers, merchants, and partners worldwide through a unified API infrastructure. The solution, it says, by integrating Ripple payments, i-payout leverages enterprise-grade digital asset infrastructure to accelerate settlement, improvement in payouts, transparency, support high-volume cross-border payouts, and flows. Okay, and then it just has a whole bunch of little statistics, what i-payout does, and a little quote from their president or CEO. So let's just watch this real quick video. I don't know if you guys have seen it yet. I know a couple of influencers have posted it, but just look at what's in the background. That's what caught my attention.
We're wanting our clients to build new business models like micro settlements, just-in-time shipping, financing, etc. that simply wouldn't be feasible before, all because the funds can move when and where they need to instantly. We are able to provide real-time payments for North America today.
We're able to now offer digital assets and the conversion of those assets in line with the real-time payments delivery. US accounts for over 40% of the global economy, providing that footprint of global payments coming in from the EMEA countries, South America, is a huge improvement for businesses globally.
Real-time payouts reduce the reliance on working capital buffers. For example, a marketplace knows that as soon as the sale is made, the money is dispatched to the seller and the commission or fees settle back immediately. This reliability will become competitive advantage and attract gig workers to platforms to pay faster and gives small businesses confidence in dealing with global partners. The digital marketplace is going to be the future, and Ripple is the right partner to take us there.
Now, I don't know if you guys noticed this, but if you look here at this portion of the infograph, they actually have this name back here blurred out. I can't make out what it says, but this little picture here in this box is blurred out, and it looks like an acronym. It kind of looks like UBC, maybe, I don't know, but it's blurred out nonetheless. Over here, you have Senders Bank, you have receiving participant or receiving bank, then you have WF, this little tiny, what is this, an infinity sign, I guess, or something like that. Like it's just in a cycle. And then down at the bottom, you have JPM and then another infinity cycle. Okay. So that's what the little tiny infograph says. Now, let me go over to my conversation with ChatGPT. So pretty much what I did is I said, what is the company i-payout? That was my first question here. And This is the response. So what is i-payout? i-payout is a global payout and payment platform used by businesses to send money to users. And you heard that lady mention that they now have the ability to integrate digital assets into the i-payout's core infrastructure. Affiliates, contractors, or traders. Common in industries like trading, prop firms, affiliate marketing, DeFi, fintech, gig economy payouts. What it does, it lets companies send payouts via bank transfers, ACH and wire transfers, debit cards, digital wallets, and international payments. It handles mass payouts, thousands of users at once, and often is used as a back-end payout system rather than something consumers sign up for directly. Now, what I did is, again, I gave these screenshots. So I simply just screenshotted them. These are the two that I gave ChatGPT to configure. And I said, these are the pictures from their new advertisement and the statement from Ripple. Look at these pictures and see how XRP is in the middle. Does this look like they plan to use XRP? And then I copied literally the entire website and just fed that to ChatGPT to allow it to digest it. And this is what it said. What the images are showing from your screenshots. XRP is literally drawn in the center. It's connected to Sender's Bank, payment rails, and other entities like wallets and networks. This is not random. The diagram like this, or diagrams like this, are usually used to show the settlement layer or bridge asset. What Ripple's statement actually says, highlighted, it says, this leverages enterprise-grade digital asset infrastructure to accelerate settlement. And that's coming directly from the website right here. You can see it says, i-payout leverages enterprise-grade digital asset infrastructure to accelerate settlement. And then it says, notice something. They do not explicitly say XRP in their statements. They say digital asset infrastructure. That's intentional language. So does this mean they plan to use XRP? What it strongly suggests is yes. XRP is visually centered in their architecture on their whiteboard. XRP is historically used in Ripple's on-demand liquidity. The use case described matches XRP perfectly. Cross-border, liquidity bridging, reducing pre-funding capital. i-payout is solving, and I quote, it says, minimizing working capital requirements. Here it says that again directly on their website. i-payout solving, minimizing working capital requirements for global platforms. And ChatGPT goes on to say that that is exactly what XRP was designed for, right? So I thought that that was just very interesting, just a little tiny infograph where XRP is on the whiteboard in the background as this bridging mechanism to sender's bank, to the receiver's bank. WF, not saying that it does stand for Wells Fargo, could be something else. But then you have JPM down at the bottom, and I would outright say that that's probably JP Morgan. But again, they're acronyms. Anything could be behind those acronyms, so it's all just speculation. But nonetheless, interesting to say the least, right? Then this was announced as well today, March 17th, 2026. Ripple deepens commitment to Brazil with expanding payments offerings, growing customer momentum, and VASP licenses and applications. Ripple, the leading provider of blockchain-based enterprise solutions across traditional and digital finance, today announced a major expansion of its presence across Brazil, marking a new chapter of institutional digital asset adoption across one of the world's fastest growing financial markets. Powered by new product capabilities and accelerating customer adoption, Ripple is now the only solution in the region capable of serving institutions across the full spectrum of financial needs, from cross-border payments and digital asset custody to prime broker and treasury management. So I thought that that highlight was cool. The rest of it is just a bunch of statistical gibberish and whatnot. It does talk about how Bank, one of Brazil's largest FX institutions by volume, selected Ripple payments to streamline USD payments and issue its BRL-pegged stablecoin on the XRP ledger, which is pretty cool. But nonetheless, that was put out today as well in terms of highlights. Now, because it talks about institutional adoption, I just want to play a couple of video clips from industry-leading experts from the industry, from the institutional standpoint, right? These aren't your average retail investor. These aren't random people on social media. These are hedge fund, asset managers, industry-leading experts from large institutions. I have a couple of video clips. Bend your ear considering where we're at in the landscape, and what they say to me presents a huge opportunity for just growth in this crypto ecosystem just in general. So first, we're going to listen to this guy here. This is Bill Birmingham, managing director at Rex Osprey. Rex Osprey is a collaborative joint initiative between Rex Shares and alternative ETF provider, and Osprey Funds, which is a digital asset manager. They designed to launch an innovative crypto-focused exchange-traded product, or ETP, and they're known for launching the first U.S.-listed spot ETF for Ethereum, Solana, and XRP and Dogecoin. Okay, so listen to what this dude says, and this was on Trade Talks from just yesterday.
From Rex Osprey's point of view, every major new asset class goes through these periods of volatility. I mean, you call it the fifth asset class.
Yeah, our thesis is that crypto is kind of joined now among stocks, bonds, commodities, and real estate as kind of the fifth asset class. And like a lot of emerging asset classes, it goes through this period of kind of misunderstanding, high volatility, early adoption, and then it becomes institutional, and then it is an essential part of people's portfolios. I mean, most people couldn't imagine, real estate investment trusts before, apartment buildings became an asset class, and now, they're a fundamental part of, investor portfolios. So we see crypto going on that same kind of trajectory.
Yeah, I also think it's important to call out that there's a generational wealth transfer that's going to take place. And, you're looking at millennials and Gen Z, 70 trillion over the next 20 to 25 years, and they understand this.
When you talk to RIAs and you bring up digital assets, the ones that understand their clients that are, moving through the generational process, and they're having discussions with family members, in the various cohorts of that generation, they see the interest. And if an RIA is not in tune with this particular asset class, they're not going to be able to service that client. So we're trying to give them the tools to be part of the conversation for that new generation of investor.
Yeah.
Right. So he talks about institutional interest. He talks about, or the lady talks about the generational wealth transfer. And in a nutshell, he pretty much just confirms that crypto is going to be a new investable asset class. Wealth managers, family offices, they're starting to pay very close attention. And in my personal opinion, again, a statement coming directly in the time of this recent market downturn, it should not be ignored, right? It should not be seen as this fear-based environment that we're operating in, and it should instead be seen as an opportunistic environment to get in before these TradFi participants flood in with massive amounts of capital, okay? So that was just cool confirmation. Then we come over here to the BitGo COO, Jody Medler, on the Future of Institutional Crypto panel discussion, iConnections Miami 2026. Shout out to the researchers for this one, posted 20 hours ago. Guys and gals, only has 17 freaking views. And I'd say that probably like 10 out of these views are us in the CYPRX Discord. It's just crazy to see. But 3 video clips from this. The first one where the gentleman here, I believe it's this guy here, I don't have all their credentials. They all stem from either asset managers, trading firms, banks, large fintech establishments. They're like all systemically important organizations sitting on stage here, or people that have large amounts of capital or interest allocated in this space from an institutional standpoint to save the spiel of who they are. Okay. But listen to what this guy says about how institutions are starting to engage with DeFi.
The genius. I agree with all these milestones. Perhaps I'll add another one that is happening right now. It's unfolding right now, and it might be one of the most important, that we're starting to see a lot of not only centralized crypto businesses, but also traditional finance businesses starting to engage a little more with decentralized finance. We're starting to see the emerging of things like decentralized vaults as maybe an ETF 2.0 wrapper, because it provides a bunch of advantages over maybe the current ETF structure. You're starting to see probably the largest private credit fund in the world engage with a decentralized credit platform called Morpho. Starting to see the largest asset manager in the world engaging with Uniswap, which is the largest decentralized exchange. So I think I can see kind of the arc here going from ETFs and then stable coins, now probably reaching escape velocity. And I feel like there is another very exciting new direction that we're taking here that involves tokenized securities, tokenized assets, and all these interesting DeFi primitives. So I feel like the industry is engaging with DeFi in a way that it hasn't in a while. That's a trend that is unfolding right now.
Okay, so he just goes on to confirm that these institutions are for a fact engaging with DeFi. He talked about the largest pension firms. He talked about huge players in the game participating in Uniswap, participating in Morpho, all these DeFi primitives which just confirms everything that we've been discussing and talking about in the Wealth 28 Club for over 2 years now. We're starting to really see institutional interest pick up, and yield is going to become the new normal. Having digital assets working for you consistently is going to be the new normal. Everybody's going to be doing it, including these institutions. And again, we're already at the forefront of having learned these protocols, understanding looping strategies, understanding how to get our digital assets working for us. So it's nothing new. And it's just really great to see institutional interest really starting to pick up, right? Next, we have this gentleman here. He goes on to talk about how TradFi pretty much was nascent from this space up until now. So TradFi was blacked out, he pretty much says, up until recent, which just gives a perspective as to how early we are in this space, in this landscape moving forward.
Your great convergence theory applies across a number of different frameworks, right? And I think if you think about sort of traditional finance, really up until a year or so ago with the change of the administration, most of traditional finance was sort of locked out, right? Primarily because of legal and regulatory uncertainty. There were certainly experiments happening in the background, right? Internal tests, thinking about ultimately where things might go. The foot of the, that was on the neck of the industry was lifted. And now with the progression of Genius and hopefully ultimately Clarity, what we've seen is a massive acceleration, right? Traditional finance now is trying to do two things. It's one, trying to figure out how it backward integrates into the industry. And two, it figures out where its traditional businesses are going to be disrupted, right, or enhanced. And so it's now looking back at who are the players in the industry, who's built, the new infrastructure, and how do they integrate with it. And then also ultimately, what does it mean in a world where blockchain rails create 24-hour settlement, 24-hour pricing, much more efficient collateral, smart contract allocation mechanisms. And so it's all happening in real time. There's still a big question if we don't get clarity or, when there's a new administration, but it isn't just a US story. If you have conversations with any of the large regulatory entities around the world, they're all working at it, right, in different paces. So I think the convergence is inevitable and it's happening.
So that was a huge mouthful, but he just goes on to talk about mass adoption amongst institutions. They're interested, they're integrating, they're figuring out how to embed these crypto assets into their core infrastructure. They're having conversations. Regulators globally are all paying attention. That just rhetoric and commentary alone, considering the recent pullback that we've experienced at this most recent 2026 event, should put things in the limelight that these people on stage do not seem worried or skeptical about crypto or the altcoin space or anything at all. They understand that this is going to take time and that it's being built out, he said, in real time right now as we speak. Right. Last clip I have for you guys. Hopefully you all can hear these clips because on my end, it's super quiet. I don't know why Zoom does that. But when I play the clips, hopefully you guys can hear them. Last one, this gentleman here goes on to say that crypto is being embedded into our everyday financial lives. Right. So just listen to what he says here.
But then on the other side, we have this big cycle of crypto starting to get embedded in the very rails of our financial lives that I think is probably going to unfold over the next few years, but we're going to be thinking about today as like the beginning of this massive wave. And again, you have the beginning with stable coins, which is kind of a tokenized dollar that is now at escape velocity. Probably every single financial institution or fintech is racing to integrate stable coins. And then there is these other tokenized assets, tokenized equities, tokenized money market funds, and then the DeFi integration. I feel like this is a kind of a secular multi-year trend that gets me very excited about. There's a lot of these innovations that will probably make asset management different in the next few years. And a lot of them are powered by crypto. There's things like prediction markets. There are things like perpetual futures, which is an instrument that was, I would say, invented or at least popularized in crypto. You have decentralized finance. All these things are converging. So I feel like if we have this conversation in 5 years, things will look a lot different. And now it's a very exciting time.
Okay, so that was the last mouthful that I had for you guys, wrapping up the video breakdowns. Now heading over here, continuing with the institutional interest in adoption. Hopefully you guys have enjoyed this so far. Again, I'm not telling you guys to go out there and invest in XRP, considering that we covered it. Rolling over now into Canton and another industry-leading expert from a large financial institution. I'm not telling you guys to go out there and buy Canton either. Matter of fact, don't invest any money in crypto because you're probably going to lose it all, right? CBC Summits, Crypto Banking, Compliance, and Stablecoin Summits. This is their LinkedIn profile. And just 7 hours ago, they put this out. It says Citi has issued its first digitally native structured notes on Euroclear's digital financial market infrastructure platform. And coming over here, there was another announcement from Citi just on March 12th, 2026, with this lady here, Deborah Karub. Hopefully I'm pronouncing her name correctly, probably not. She's the head of digital assets at Citi Wealth Management. And I just want to read a couple of highlights as to some things that she says, because again, considering what we just heard from those individual experts on stage, here's another representative from a large bank. And look at what she says. In the summary of this interview, it says digital assets are moving from experimentation to institutional discussion as wealth clients seek clarity on their role in portfolio allocation. And if you guys remember, this gentleman here, right, from XRP said that institutions are increasingly looking at how to allocate this next investable asset class into their portfolio. So it just goes hand in hand with what we've previously heard. If we scroll down here, she also said, we are still in the early stages of what could become a meaningful evolution of digital money. Then last but not least, it says over time, she believes digital assets may sit alongside traditional financial instruments rather than replacing them, and that Citi, or we, are preparing for a future where digital assets exist seamlessly alongside other asset classes. So this whole entire statement just goes hand in hand with what was recently said on stage via the video clips that I played for you guys. Now back over here to Citi issuing the inaugural digitally native structure note on Euroclear's DFMI DLT platform. Now there is speculation that this Euroclear DFMI platform runs on Canton. As we know, Euroclear sits as a Canton super validator. They've done a lot of work recently with Canton over the past year and a half, probably going back even a little bit further. There is no firm confirmation and documentation that says that Euroclear's DFMI distributed ledger technology platform sits on Canton, but you can clearly go look at the partnerships between Euroclear and Canton, and I would be not surprised if that was announced in the near future. But this is still a huge announcement, and this is just from the beginning of March. Citi issued its first digitally native structured note on Euroclear's digital financial infrastructure platform. This transaction marks a debut of digitally native structured notes being issued on Euroclear's DFMI and represents the first of its kind being offered within the wealth management industry. So more from wealth management industry, taking initiative and rolling into this whole distributed ledger technology ecosystem. Coming over here to Kaiko, we're on the topic of Canton. They just put this out 11 hours ago, and this piqued my interest because it has everything to do with regulatory alignment and how Canton is infrastructure built and ready for and to handle these institutions to come on chain. It says, as tokenization or as tokenized assets on chain. Matter of fact, let's just go over to the official announcement so I'm not double repeating myself. But you can see here they tag Canton in their LinkedIn post from just 11 hours ago. And when you click on the link, this is where it takes you. And it reads, how smart contracts break without regulated data. This is actually a very interesting read if you hold Canton coin. So it says, tokenized products regularly face the challenge of integrating external data into their smart contracts, whether it's for foreign exchange conversions, collateral pricing, interest rate fixings, or emerging use cases like repo valuations. In many early institutional implementations, the default approach has been for the operator to inject these values as static parameters through transaction inputs, while a part of on-chain data sourcing may be automated. The on-chain representation remains static. The smart contract receives pre-computed values with no provenance, dynamic access to underlying data feeds, or capability to update these values autonomously. While functional, this static parameter model generates significant operational risks and uncontrolled IP exposure while compromising auditability and creating regulatory vulnerabilities for institutional applications, which is a problem, right? That's a no-no. Well, this partnership between Kaiko and Canton solves this. When operation teams use back-end systems to push valuations on chain, Through static parameters, whether for daily NAV updates, portfolio pricing, or repo transactions, the process creates operational risk points at every stage. In a repo transaction, a single incorrect parameter can cascade through the entire lifecycle if the backend system pulls the wrong security price and applies an incorrect interest rate or experiences a data feed interruption. The smart contract executes with flawed inputs. For repos, this means miscalculated repayment amounts, incorrect collateral valuations, and potentially inappropriate margin calls. Similarly, a bad NAV update can trigger miscomputed fund values and require painful reversals or compensating trades that are difficult to execute cleanly once entitlements have changed hands across multiple counterparties. I know that you got to kind of nerd out with me to read this, but it's interesting because it has everything to do with the regulatory environment. It is also compromising auditability because the contract state contains the value, but not the full story of how it was produced. Take a stablecoin stress test, such as the USDE DPEG that happened on October 10th, which is the most recent market top, 2025. If your data pricing references only one source while the market trades meaningfully differently elsewhere, you can end up allowing redemptions on terms that don't reflect real market conditions. Later, when risk audit or regulators ask for accountability, relying on a single source of static oracle configuration prevents solid and well-found justifications that lack provenance, makes it difficult to reconstruct whether the valuation was consistent and whether any discretionary interventions were justified, documented, and applied consistently across venues. And finally, it says static injection creates regulatory vulnerabilities because the institutional application typically needs to demonstrate that valuations are based on licenses and resources with controls around conflicts of interest and governance. The Canton network was designed for institutional finance with requirements for confidentiality, compliance, and scalability. However, if it were to use partially static pricing, it would undermine these fundamental principles by breaking traceability, eliminating independent verification, and preventing real-time auditing. Beyond these governance and control issues, static pricing also creates two very practical blockers. First, regulated data is typically licensed with usage restrictions that require proper attribution, audit trails, and controls on redistribution, all requirements that static parameter injection cannot satisfy. Second, comprehensive market data is too large and frequently updated to be manually pushed on-chain, transaction by transaction. Therefore, using unregulated and sometimes static data in smart contracts, even for a simple daily update, creates technical and regulatory vulnerabilities. Without source traceability, no regulator can independently verify the data used to calculate metrics, resulting in a loss of the ability to prove that price comes from a licensed and compliant provider. Now, it says, that is precisely why institutions and regulators increasingly demand auditable data rails with named counterparties. And this is exactly what this partnership solves. Kaiko's Oracle on Canton addresses all of those issues mentioned above, which is why it was such a mouthful, but I wanted to read them to you guys so you understand the breadth and the depth of what this partnership built out on Canton establishes for institutions. It says Kaiko's Oracle on Canton addresses these issues by publishing a verifiable hash attestation and respecting intellectual property rights. Kaiko has built a complete Oracle infrastructure on the Canton network, the blockchain dedicated to institutional finance, with the company becoming a super validator of the network in June 2025 and playing a key role in its evolution. Kaiko has developed a dedicated data layer offering three main functionalities: secure data distribution, improved readability and auditability, advanced composability and workflow automation. Kaiko provides bidirectional data connectivity for the Canton ecosystem, with data on-ramp enabling direct access to regulated and compliant market data, such as BMR-compliant reference rates, FCA-regulated NCFX-FX benchmarks, and market-to-market valuation feeds, and even spot and derivatives prices. Unlike decentralized oracles designed for public blockchains, the Kaiko Oracle on Canton meets the specific requirements of regulated financial markets by adopting a centralized and responsible approach. So I wonder if other decentralized oracles that are designed for blockchains like Link or others don't have these features. However, this partnership with Kaiko and the oracle that they built on Canton meets these specific requirements for regulated financial markets, which I found very interesting. Before Kaiko, blockchains like Canton faced a critical vulnerability where unregulated price feeds created single points of failure with no accountability, exposing protocols to manipulation and stale data. Kaiko's Oracle architecture, however, closed this gap by introducing a transparent, auditable system where every data point carries verifiable provenance and every actor bears clear responsibility, transforming price feeds from a systemic risk into a trusted infrastructure layer. So, holy crap, I know that was a mouthful, but I found that to be very interesting considering that it mentioned everything in regards to regulation, right? Now, last but not least, Canton Foundation put this out just 14 hours ago. T-Rise Group Corporation, and how it's an end-to-end institutional tokenization platform. Then down here, it talks about how they also announced a live real estate equity offering on Canton distributed via Republic, showing how tokenized real estate can be issued, again, here's that key vocabulary word, on regulated market rails. I found that to be very interesting, again, because it has everything to do with tokenization, real estate, which a lot of us are interested in, and regulated markets. So if we come over here to this announcement, this is from back October 31st, 2025, and it says, this live offering demonstrates how T-Rise's institutional structuring and tokenization combined with Canton's privacy-enabled rails and Republic's regulated distribution can bring investable real estate on-chain. This completely missed my attention. This is obviously, of course, from the end of last year. But down here, it mentions Deloitte projects tokenized real estate could reach $4 trillion by 2035 and references T-Rise's real estate tokenization model. Now, T-Rise's institutional tokenization model, remember, is combined with Canton. And Deloitte is here, which is, again, a major consulting firm, mentioning it in their documents. So if you come over here, I found this to be very interesting and just further, in my opinion, solidifies Canton's role in the future financial ecosystem. I've already bored you guys to death reading all of this, but this pretty much talks about this tokenization project here. It says, while functional ownership of existing buildings has been a common theme in tokenization, in this new tide of large-scale developments, there appears to be a renewed interest in infrastructure projects and under construction residential and data centers. This could enable a bit ownership of capital-intensive development projects with potentially attractive upside returns. Back in 2024, T-Rise Group signed a $300 million deal to tokenize Project Champluri, a 960-unit residential development in Canada. Another India-based investor recently unveiled a $1 billion fund that integrates tokenized equity and debt for global data center property investments. And if you come over here to that initial announcement, here it is. This is from T-Rise Group, and this is where they talk about that Project Champluri. And we know T-Rise Group, combined with Canton, enables regulated distribution that can bring investable real estate on chain. So this is just huge. Just goes to show that there's massive amounts of interest in investable, money and capital allocated to this tokenization of real world assets and real estate on chain. So I thought that was pretty cool. Last but not least, back on March 14th, just spending some time on LinkedIn and doing some research, I mentioned this to you guys. I said Moody's is about to make a very quiet but massive move. One of the big three credit rating agencies is preparing to run its own validator node on Canton Network. Think about what that means. Credit ratings as the backbone of global debt markets moving directly on chain. This is not hype. This is infrastructure for tokenized bonds, real world assets, and regulated digital finance being built in real time. Then if we come over to today, March 17th, 2026, what did Moody's announce? Moody's Corporation today announced that Moody's Ratings has launched its network-agnostic token integration engine, or TIE, becoming the first credit rating agency to ingest analytical data and share credit ratings insights on-chain. As an inaugural step, it is the first rating agency, I like how it says the first because that's probably hinting that there's going to be many more. It is the first rating agency to operate a node on the Canton network. This milestone marks a significant step in Moody's commitment to digital innovation, intending to enable secure and compliance, there's that word again, compliance, regulated, right? An efficient ingestion of data and dissemination of ratings enabled by technology built for integration across platforms. So I won't bore you guys to death anymore, but I thought that all of these announcements were net positive and bullish long term that just show that Canton is in the midst of building out a infrastructure for regulated finance and traditional investors and large market participants to actually come on chain in a sustainable manner that adheres to regulatory requirements. So that is all that I have for you guys today. That is just a quick rundown of some of the research that I've come across inside the private CYPRX Discord. As always, many blessings to you guys. Remember, none of this is financial advice. Not telling you guys to go out there and buy any of the digital assets that we talked about today. Always do your own research and come to your own conclusions. Be cognizant, be aware out there, and I'll see you guys in the next video. You guys have any questions? I'll leave the floor open.